Okay, so let me start recording here. Okay, in today's video, we're going to talk about candles. So first of all, before talking about candles, I want you guys to know one thing. I guess most of the people might know this. I'm telling it for the people who doesn't know. So there are buyers and sellers in the market. Buyers move the graph up and the sellers move the graph down. Okay, first thing that I want everyone to be clear about that. Okay, then and also I suggest you guys to maintain a notebook for this so that you can check again if you want. So write the notes, whatever videos I'm giving, write the notes, and then make sure you study like you study for the exam. I mean, you don't have to study, it's easy basically. So yeah, I'll teach you about the candlesticks. So these are candles, if you can see. Yeah, these black and green ones. So candles are have two parts. Okay, first part is called body. Body of the candle is usually this green and red part. Red green is for the bullish candles. In this example, you can customize it as well. I've showed you in the previous video of TradingView. And then there's VIX. And body is, I'm just showing it as green and red and green. So red. For this example, the red one is a bearish candle and the green one is a bullish candle. So bearish, I want you to think about it this way. So, what does a bear do when they attack? They just push it down, right? So, bearish market or bearish candle means the the candle which pushes the price down, and the bullish one is bull usually picks it up, like you pull it up. That's how bulls usually attack. Uh, so bullish market is a market which is going up. So now we'll talk about what is the body and what is wick. So first of all, uh, this part is called time frame. So this is right now it is running in a 1 minute time frame. This is Bitcoin and US dollar crypto. So today is a Saturday, so none of the no other markets run. Only Bitcoin runs for Saturday and Sunday as well. So I'll show you an example, like live example of how the market moves. So usually there is body and there is wick. So what is a body of a candle? So this is where the price actually closed inside. So first of all, just think about the green candle. Okay, so usually the green candle is called a bullish candle. So what does bulls do? It moves the market up. So the open price will be the lower part of the candle, like this part. I just wrote it because I'll reduce the time. Okay, this is the open, and the top part is the closing part of the candle. And these lines which comes up and down, these are called wicks. And for a red candle, the it is called as a bearish candle. So the open price will be on top. I want you guys to note these things down. So the open price will be on top and the close price will be on the bottom. So we we just said about time frame. So 1 minute, if you go and select 5 minutes or 3 minutes, I just selected 3 minutes. So one candle needs 3 minutes to form. So you can see here now after 7 more seconds, the candle this candle will be formed. Another candle will start. See, now another candle has started forming. If I can zoom it in. So time frames are basically how much time it takes for a candle to form. I hope everything is clear. So for example, I'll go to a 5 minute time frame. 5 minute time frame. Okay. So one candle, this is a currently forming candle, which needs 3 more minutes, 3 minutes, 30 seconds more to form. So the 5 minute candle, one candle, 5 minute time frame. So you call this as time frame. So 5 minute time frame is used for knowing how much time a candle takes to form. So 5 minute time frame takes 5 minutes for a candle to form. And the open price of this, for example, a candle has in an example of 5 minute time frame, so it's 12 o'clock now. I mean, not exactly now, but yeah, just think about it as 12 o'clock. So the you just put it as 5 minute time frame. So it started at 12 and it will end by 12:05. The body will be formed and the candle will close and a new candle will be formed. I'll show you a live example with 1 minute. So right now 28 more seconds are there for a candle to form. So we will wait. Right now this candle is forming and notice where these wicks are. So what are wicks? I'll tell it in just after 10, 12 seconds. Okay, so just watch it, how the market, just watch this candle after 5 more seconds. Four, three, two, one. Yeah. So another candle is forming. This and it will take 54 seconds more to end that candle. So this is how candles are formed. This is a 1 minute time frame. So I just so it shows a candle shows one, for example, in a 1 minute time frame, uh, one candle shows 1 minute of price action. What did the price do for the 1 minute? I hope everything these things are clear. And now I'll talk about. Okay, so for example, the open price is at 12 o'clock. I mean, open price is 100 and the time is 12, and you put a 5 minute time frame. So after 5 minutes, it just reached 105 and it'll close. Then another candle will start forming. So this is basically how candles form. And then if it's a bearish, if it's a red candle, okay, the red candle, the open price, the open will start over here, the top part. After this candle, we just form, just say this candle has formed. So the candle opened over here, it just went down, down. It was 12 o'clock, and then by 12:05 the candle closes over here because we took it as a 5 minute time frame. If it's a 4 hour time frame or 1 day time frame, 1 hour time frame. So, for example, it's a 1 hour time frame. So it'll take 1 hour to form one candle. I hope everything is clear to you guys. So yeah, I'll go back to 1 minute time frame. Huh. So and I'll you can just note this down. So what are wicks? It is the place where the price has visited but did not close there. So I can show it live to you. So wait a second. Just notice this candle. Okay, the candle just moved up till here. We have 50 more seconds. We'll see what happens. See, it just went down and then there is a wick which is formed. We will wait for it to close for 40 more seconds so that you will understand properly. I want you guys to notice the live graph. See, it is going up again. This topmost point was the point where the price has reached, but now the price is at this point. The prices came till here, but still it didn't close above that. See, now because of that, a wick is forming. So wick are basically where the price has reached but was unable to close. So I want you guys to note everything down, and I will say, okay, just keep a notebook separately for trading, so that you will, if even if you feel, if you have any doubts, you can go back. See, now the time is done. So this is how a wick has been formed. So the price, you guys can rewind the video again if you want. The price actually moved till here and then it came down. So that the and when the 1 minute was done, it just closed over here. So this part is where once the price has visited, but didn't close it during the time frame. So you can see more wicks in 4 hour and 1 day or 1 week time frame, because usually see these are all wicks. So 1 day time frame, see the price has reached here for a day, and then it closed over here, closed over here. So that is how you see the time frames, and that is how wicks are formed. So after this, I want you guys to know. I hope everyone understood how candles are formed. So the buyers push the market. If the price is at 100, the buyers push it to 1.5 during the time of 5 minutes for this example, 5-minute time frame. Similarly, for every other example. And there are different candles which you need to know. So there is bullish engulfing candle. So first there will be a red candle. Red candle means a bearish candle, and the very next candle closes above the whole body of the previous candle. So this is called a bullish engulfing candle. And for this one, in this example, this is called a bearish engulfing. The market was moving up the previous candle, then the market just pushed the price down. Then the candle which is closed. Okay, I want you guys to notice after the candle closes. If the candle is forming, it might go up and down. So you have to wait for the candle to close. So for example, here the candle will close by 31 seconds. So you have to wait to confirm anything. So do not rush on things. Just because the candle just formed, candle was moving down like this, doesn't mean it'll close here. It might close here also. This is how candle moves. During a live market, it might go down like this. It might come back up like this. So at the end, when it closes, it should close below the previous candle. That is called a engulfing candle. So I usually don't use these engulfing candles, but I'll give you an example just to show you. Okay, this is a small example. See this one, this candle. So this was the last candle. So the candle just closed above and it started moving up. For example, over here, these are two candles. If I go to 2 minute time frame, there will be a one candle, I guess. Yeah. So this this is another candle. It just closed below this candle. I hope you can understand. See, this one is another engulfing, bearish engulfing candle. It just went up and then it pushed it down and then it'll rally down. So that is how engulfing candles shows the market pressure is, changing. But do not take it as a confirmation and do not trade now. These are the some small confluences which you can use for the market. So if people don't understand what is confluences is like the tools which you will use multiple tools to get into a market. So it's like a tool, a small strategy or a tool which you see to confirm this how the market goes. Let me just close this off. Yeah. And then there is doji candle. So doji candle is where the candle just goes up, goes down, goes up, goes down, and then at the end the buyers and sellers will be in a battle, and at the end it'll close in the middle or like a small candle. Those are called doji candles. That shows indecision in the market. So usually just before an up move which will happen, there will be some kind of doji candle. Let me see an example over here. uh, Usually there will be a doji candle. This one, see, before an up move happened, see this one is a doji candle. Doji candle came, and then the next candle which closed above was a bullish candle, and then the market, let me, and the market started moving up. Wait, what did I do there? And the market started moving up. So these doji candles, I want you guys to note it down. Okay, just note it down. Doji candles is like a confluence which you can see, which you can use when you're trading. But do not go just because you saw a doji candle, just don't go and trade. Okay, see, there'll be some failing examples as well. Like there will be doji candles here, see, but it is still going down. But do not get into trade just because you saw a doji candle and you saw, okay, over here, just you saw a doji candle, you saw a up candle, a green candle, and then according to your prediction, it might go up. But it didn't happen, it just pushed down. There are other factors. There was a small liquidity sweep happening. Okay, I will talk about those things later. So these kind of things are just confluences. I want you to know about this. We will combine everything at the end and then we'll start trading. So I hope everyone understood what are candlesticks and how candles are formed. I hope I did not skip anything. I will talk about the trends and all those things in the next video. So right now I'll end the video. Thank you so much, and please do subscribe so that it'll be beneficial for you guys, and this is gonna be like the easiest trading channel you will ever see in YouTube. No one is gonna tell you this easy in this simple ways. So yeah, I'll just turn it off.